Right, this time we're going to start by looking at the Nasdaq. It's been an interesting period in the markets these last few weeks. I resumed sort of significant trading in early July, so a couple of weeks ago, and the markets are looking toppy. Why? Well, we've had this rounding formation here with lots of chop on the, this is the weekly, small candles overlapping, wicking, awful trading. You saw this go on from July of 2025 into March of 2026. Agonizing stuff. Week after week, month after month, positions get in, stopped, positions get in, stopped, positions get in, stopped, positions get in, stopped, significant low. A lot of trading going on here, a lot of pain. You're getting in here, and you're out here. You're getting in here, and you're out here. You got 3 good weeks here. You're getting in, you stopped out. You're getting in, you stopped out. 3 good weeks here. 3 weeks down. Big week, little week. Oh, we stopped out again. We go nowhere, we go nowhere, we go nowhere, we go nowhere, we go nowhere. You're getting chopped. Unless you're like the best range trader in the world. This is a weekly. You know, the range is on the daily or the 4-hour or the hourly. Well, there would have been tradable stuff in there. But the issue is you'd never be... Like, if you are getting in and saying, right, I'm long, I'll move my stops up with the 14 band MA, you keep getting stopped out. Or if you're trying to short here, again, the wicks just slaughtered you. So a very significant amount of trading going on. And then, the moonshot. Resistance free, not a single down candle, little doji here. 33%. Rapid price action. And then, this. The growing weight of like the flower head, if you like, upon the ever so spindly stem, weighing down on it and wanting to crush back down into real support, probably closer to 25,000 than anything else. Divergences on the highs, stochastics rolling over, this, that, and the other. And where is the weakness being signalled? Well, it was being signalled in semiconductors. Here they are. Where you saw your divergences coming in. Again, there's the 6 months of pain or whatever it was. No, not quite. Several months of pain. The straight shot move up. Head and shoulders. Breakdown. Backtest. And hopefully we can now move down. This is very... But of course, whenever there's nice, clean technical setup and technical action like this, it's very tempting to just say, well, if I can see this, then we're going to be horribly frustrated and it's not going to play out. Nice, clean, technical setup, it's obviously not going to play out, and you're going to get shafted. And boy, oh boy, has the shafting been pretty intense this week for both sides of the market, buyers and sellers. If we go down to the daily, you can see on my little positions on my little account. Where did I start getting involved? So around here, around the 10th of July, something like that. I've got a feeling I sold down here, went whoopee, I've made lots of money, and then it retraced and I lost it all, and I was back to square one. And it was a terrible effort because I was short biased from looking at semiconductors, looking at breadth and internals. I was short biased this whole time. So right, here we go again. So let's sell this. So I got some sells here on my diminished account because obviously when it came back up, I didn't just move all my stops on my high sells to break even. I was adding more sells as it was going up that was eating into even my unrealized gains until it was just completely overcome and the whole thing was just pointless. Similar story here. I caught some great sells on this thunderous down candle, and if we go down to the 4-hour, what I thought was happening, guys, was this: wave 1, wave 2, wave 3, wave 4, and then wave 5. But wave 4 stopped. The bounce kept bouncing. You've heard of buy the dip. I was trying to sell the bounce, and the bounce kept on bouncing. It came all the way up here, and I was forced to liquidate. And again, everything I'd made from my shorts up high, adding, thinking this was just a wave four, so adding, and then the bloody thing just keeps on going. I mean, I got stopped out, and again lost money probably on that as well. Lost money here. These massive swings of 1,000 points plus. I shorted them brilliantly, but I thought it was the big one every time. And I was shitting my pants that I would miss the big move, the big drop. That's going to be the swing move to 25,000 and 22,000 on the NDX. But then the fucking thing, it just kept bouncing. It just kept bouncing. So we've done this. We've done the similar thing here, but this time I cashed out. So I had shorts coming down here. Detected this bounce, and got out. So I made some measure of money here. But then look, I've had to reshort, and all the way down I've been reshorting, and now we're at the lows. Divergences potentially. I've done more lines than it can recall. I have to delete all my 4-hour annotations now. There we go. So I'm heavily short, but not from super high levels. It's not at all beyond imagination that we come back and revisit 29,000 or even higher. I mean, God help us if we overcome this resistance here and we can, turn it into support, then maybe we're going to be going like, back up to the top of the channel. This is not what anyone wants. I don't think even buyers would be expecting that at this point, which is probably why it might happen. The decisive close under the resistance. Again, it's crystal clear. The decisive close under this resistance, under these lows, should precipitate, ideally, a picture-perfect technical analysis of another big drop. We plummet. We're on our way to 25,000, and then we'll get a bounce, a decent bounce, because we keep on bouncing. We've been bouncing like a Powerball. Enough bouncing. Enough. If we can get all this wacky straight shot up action, we can have some nice straight shot down action. Is what I would want. So here we go. There's all my shorts waiting to be obliterated. But this time what I've done is I have moved most of my stops into at least a small profit or into break even. We've been getting lots of negative reversal signals. Why did I keep shorting this thing? Because what was interesting was actually the S&P especially was showing a lot of strength, far more significant strength than the Nasdaq, which has been the leading sector, the AI boom or bubble. So to see this struggling while the S&P was looking relatively strong was actually, to me, a bearish indicator. And there were other things as well. And you're getting these negative reversals. And heads and shoulders on. There's a nice head and shoulder. Negative reversal. And you went down on your time frames. You got it on the hourly. There was some on the daily. Where was a good negative reversal? Here. Look. Lower close. Higher close. So even at these very high levels, when you got this monster candle up into what, and there was no divergences. You went down on the hourly here. You went down into the hourly analysis, 4-hour candles, hourly candles, half-hourly candles, even like 15-minute candles. There were no divergences at these highs relative to here. It was only if you had your daily here on my slightly obscure indicator, or on the stochastics, which is a bit more normal. It was a very disguised sell moment. So we are creating bullish looks that then turn into selling moments. Is the pattern I'm picking up on. But anyway, there we go. So again, semiconductors, picture perfect, technicals, breakdown, backtest, all your indicators, all your momentum indicators, negative reversal on stochastics, below 50. We're below 50. You name it. It's not looking good. Unless this is an immediate, and I mean immediate, sort of bounce area. The Japanese index, the Nikkei, is looking very poorly. That's all that's worth looking at, I think, on here. S&P, relatively strong. People were looking at the triangle, but if I get rid of this, it was actually a channel. The Nasdaq, the daily price formation was a lot more like a triangle, but here you can see it's almost like a bear flag channel. And we came up the top of it. And what did we do on the daily? Yeah, that's right. We've got a momentum divergence. No divergence here. We've got a stochastics divergence. And then breakdown, back test. Breakdown, back test. Yeah? Looking at NIAD. We kept making new highs. Look at this. So the broad stock market kept making new highs, even when its best index representative, the S&P 500, didn't. And its leading sector, the Nasdaq, was indeed coming down. This is issues. So lots of stocks, again, if capital is rotating, some stocks are going up somewhere, and when the leadership is so concentrated, as it was in tech and AI, people can be coming out of these market-moving stocks, this handful of market-moving stocks, into defensives or into broader market, and the issues, therefore, that are going up will increase because there's more of them outside the leading narrow tech sector. So this all looked very bullish and cumulative NIAD. It's going to new highs, whoop-de-whoop. So surely the market will follow, being the usual line of thinking. However, if we are at a turning point with sector rotation and all that jazz, and the end of the IR bubble, this is actually a bearish indication. And we're below the 20, which is, you just sell by anyway under the 20. Volume. Now, the NIAD cumulative advanced decline volume I find very untrustworthy because you get these spikes up and down that appear immediately following session close for the day. And it'll have the correct date in the corner here. And then you'll check a day later and it'll have been modified or altered or recalculated or something. But in any case, you see that volume in advancing stocks, in advancing issues, the volume has not made a new high since late February. My goodness, wasn't that a long time ago? And it could be that we're just taking a long time to catch up again because people panicked and they weren't putting the same volume back into the market, which has allowed a float up. Yeah, a low volume float up. This would be the alternative interpretation. We shall see. We shall see. Again, this is all looking bullish. This looks like a flag on the percent of stocks above the 50-day. MACD has reset, curling back up. But NAHL, this was what was helping me also stay short on the Nasdaq, because even as we were putting in this high and then this high and then this high, we kept getting these godforsaken bounces in the context of a strong S&P. Remember, the S&P was an awful lot stronger. It was up here, relatively speaking, compared to Nasdaq. But again, look, NAHL was sticking close to zero or under zero with our MACD cross. We're getting a bit of a positive divergence now, which is another. Are we going to have another bounce? Another bounce. Why not have more bounces? Why not? Heaven forbid we have a nice clear trend and get it over and done with and we all make lots of money. Heaven forbid. Rinya. So this is the broad New York Stock Exchange record high percent index, and you can see it's been struggling for a while against, again, our other leading broad market index, the S&P. And if we follow our 20-period moving average, yeah, every time it falls below like 60 odd, you get a bounce here, you get a bounce here, you cross, it goes down. We're above, we're above, we're above, you cross, it goes down. We're above, we're above, we're above. Well, look at here. It's not, well, it's barely come above that level. Let's say 69, 67, 6. No, I won't do it. It's been out of fashion for months, even with the idiots. But it's really been struggling. So for a prolonged period now, our 20-period moving average of record high percents has been really struggling to get back into bullish territory. So even though we've got a very extreme reading, a bounce back up, The overall indication is that stocks are struggling. So that's not the only one. Here we have consumer discretionary against staples. Big move down. Close to the levels we were when the S&P was closer to 6,400 than 7,400. Stocks against bonds. We're not seeing a huge flood into bonds. I guess because the rising interest rates, devaluing existing bonds. I don't know. I'm not an expert on bonds. This is something I've been playing around with. Is a ratio chart with the broad index versus the defensives ETF. So the broad index S&P 500 is holding up relatively better, but you can see you've got this lovely divergence, positive divergence here, gaining against the defensives as we were putting in this low, and also on the MACD. But the S&P is the broad market. The leading sector was the Nasdaq. So this is actually more important. How is the Nasdaq, the leading sector, doing against defensives? Well, it's having a much worse time. We've already broken the low, the June low, in the ratio. And we're below all our key moving averages now, except for the very long-term one, which is just sort of on there because it's on there. So not a good look. So that's my opinion on the broad market. I think it's not so important, other than it's going to be extremely frustrating and probably bad for our trading accounts if we get another goddamn bounce, or even go all the way back up and retest the highs or something, which would just be appalling. But I mean, maybe you could trade it. And again, just look at these positive divergences coming in. It's just sickening, isn't it? It's absolutely sickening. Overall, the look is still sell favourable. I don't see how it's possible to draw another conclusion than that, even though the obvious buyer setup is we've come under the floor, we've taken all these juicy wicks, and now we're going to have a monster bounce and go to, Nasdaq 40,000 and specs S&P 8,000 and this, that, and the other. Would be the bull case, the buyer friendly case. Let's look at something else. What else has been deeply frustrating this week? Natural gas. Natural gas has been deeply frustrating. I've been saying for a week or two that I would be expecting natural gas, because if you look, let's just zoom out. This is the daily continuous, but it's the same on the futures chart. Look. Left shoulder, head, right shoulder. It's there. It's right there. It's staring us all in the face. We've come down into the right area. We've not put in any spectacular divergences. There's been a bit underwhelming. But in any case, we've got a choppy price action, so an awful lot of trading activity going on. Indecision, things changing hands. The dump is over. We're channeling into a support which is bullish. We've broken out, and now it looks like we have back tested it. So the point of origin of the move is there, and the breakdown or the breakout was at this point, so we raise it up to the breakout point, and there's our fun little buying box that you would be looking to go long inside. And it's right there. It's wicked into it. It tried to wick up. It got pushed down. It wicked up. It's sort of in a no man's land now on the 6 hour. I mean, it depends how far you want to put your stop down. Just under this demand box, I would suppose, or maybe under the weekly, this darker purple, showing where the bottom of the left shoulder was. It depends what your risk tolerance is. It's worth noting that we've sort of flattened out here. There's not enthusiastic momentum on sell volume. Equal lows on the stochastic. Actually, a small divergence on the pure price momentum. So if you were going to go long, I mean, you could even just pop your stop, just here, or somewhere. If you assume that the green box has been tapped and we're breaking this yellow, resistance, then you could do that. You could have a much closer stop. And the energy complex, crude has gone ballistic. If we look at the energy complex, energy in general, big, crude, natural gas, shit. Against crude, not much in the way of a sign of recovery. Against the energy complex, left shoulder, head, right shoulder. What do we think? There's very little sign of positive divergences or anything like that. It looks bad. Against stocks are not going anywhere in particular. Commodities are doing well against stocks. If we look at in general how commodities are doing against stocks, they're doing well. Is natural gas one of them? No, it's exceptionally weak and shit. Crude has run up. And again, did I take advantage of this? I had this nailed down here. No, because I've been spending all my time trying to short the Nasdaq 100 is what I've been doing. A little bit of silver, a little bit of coffee, a little bit of natural gas. So I've not caught any of this, even though I called this long, I called this low. I've benefited absolutely zilch, and we've had this huge move up now. Is now a good time to buy? Well, no, because it's just had a huge move up. It might want to digest or consolidate. What you would say is okay, but this is support. So if you're going long, you're going to have your stops below support here. It's not such a long way. But it's not ideal. It's not ideal. And as always, you can just go onto a super low time frame and narrow it down even more. So here we go. Look, we've come into the support zone. Whoops. We've got positive reversals all over the place. Momentum is making lower lows. Price is not. Positive divergence at this specific. So you could go long on the open if you wanted and just put your stop down here somewhere. For a more local entry, if the daily chart, if that's looking a bit too extended for you, there's always another time frame. Just like there's always another market, there's always another time frame. Coffee, the thing that bothers me about coffee is it only trades in UK time from 9:15 in the morning till like 6:15 in the evening. It's just not open long enough, and it gaps. I hate instruments that gap around. It's bad enough with the things that do trade around the clock on Globex. Never mind something like this where you only get to trade it for, well, it's not even 12 hours a day, is it? It's just like an 8-hour day practically, But in any case, we've come down to the mid channel. We are putting in, can you guess what? That's right, positive reversals. Stochastics have reset. It looks like we're wicking around a bit. We're hesitating. So it's not a terrible spot to, and again, here's the midpoint of this cluster that became the pivot, that became the midpoint of all this horrible price action. So yeah, you might, yeah, that's coffee. You would expect more upside. It's digesting the big up move, but if you look on the weekly, it's again, there's your mid channel. It probably looks, it'll want to come and test the channel top, I would have thought, or exceed it. If you look at the monthly, I mean, you go, goodness, coffee's so expensive. But if you keep zooming out, it's been this expensive before, and adjusted for inflation. I mean, is this not like a monstrous breakout? If anything, would be the very bullish take on that. So we've done coffee, we've done this, that, and the other. Coffee again. Stocks, crude, bonds, tech, blah. You know what? I think that's about it. Let's look at some more. Is there any more internals worth looking at? Oh yeah, metals. Let's look at metals. There's silver. Ooh, the poor silver people. I mean, I've lamented this fact before. Can you guess when I was trying to get long silver, because all the fundamental people were telling us all that any moment now, silver justice will happen. There'll be the great wave of silver, whatever the fuck, end the Fed. Yeah, it was in here, and it just chopped the fuck out of me and blew my account. So while I was wounded and bleeding and very hurt emotionally from that, what did silver do? Yeah, it did this. It finally happened. There was the great silver rocket, the great silver moonshot. I got none of it, but the poor silver people, it's been shitting its pants ever since. Good job, silver's antibacterial. It is all I'm going to say about that. So That's an important level. Let's make that very thick. Any more for any more? That's an important level. Any more for any more? That's an important level. It'd be great if it went to 50, because I mean, it's meandering around now. The bulk of the falling looks like it's over. We do have a breakout and a back test. We do have a breakout and a back test, and we have a little buy box. A little buy box here. We would make same as we did for whatever it was we were looking at, natural gas. But again, look. Negative reversal on the daily. So our new downtrend would be like, our local downtrend is now here. Pop all this on. Where's it going to go? But it's not channeling down at support. This is not necessarily anything useful yet. I would actually get rid of that. But again, divergences on the lows, big divergences, huge, and it's like, yeah, I know. So which signal are you paying attention to? Are you looking at the positive divergences and the fact we've had a massive fall, the channel breakout and backtest, or are you looking at the negative reversal? You pick your poison. But we were getting negative reversals on lower time frames too. So like from no, not here to here. There was one, but then it erased, and I've not deleted the lines. Now there's a positive reversal, but like locally, there we go. There's a negative reversal. It's a bit long-winded. Oof, not quite. Maybe double top. There was the head and shoulders. I actually shorted here. I actually went short here and got a little bit of this, but then cashed out. Tried to short more here on this consolidation, thinking we tapped this and it would fail, and then we would go deeper. It didn't. It bounced. So I've not been involved anymore in that. But you can see that the trend line resistance from this high through the head and shoulders was the top of this wick here, and we've pulled back slightly. Go down further. We're under the 50 on the RSIs, on the shorter time frames. It's meandering. It's just, what is this? Contradictory signals. Positive divergence, it's a bit flat and directionless. If it's going to fall much further, 50 would be a reasonable target. Maybe 54, even 56, but it doesn't look like it wants to fulfill its destiny. A breakout of this range here I don't like breakout trading, because most breakouts fail, because most trading will you're either being faked out, or you're getting a return into a range. Most times markets range. Most price action is a range. But yeah, you could trade this like a big doji. But if you go on the 4 hour, yeah, I mean, you're getting these small candles. You could just trade a breakout. Is the hourly better for that? Yeah, just like this doji. Breakout of that doji. But is silver going to pep up a bit? Well, let's have a look. We look at our gold silver ratio. Basically, when gold is going down against silver, buy silver, because that means people are feeling more speculative and flooding into undervalued metals. When gold is gaining against silver, this means people are feeling less panicked and less speculative, and there's less of a flood into undervalued precious metals like silver, and it's more like business as usual. So business as unusual, silver goes up. Business as usual, silver is neither here nor there. We're in no man's land. Momentum is deteriorating. We're wiggling around our short-term MA in a very unhelpful and confusing way. We're just touching the 20. So strictly speaking, silver is still kind of on a sell against gold, and therefore silver is a sell in general. But maybe it's going to change. Maybe it's going to start becoming a good buy. If this is a left shoulder ahead of right shoulder, if we can come under these moving averages, crossover continues on momentum, silver would be a cracking buy for the reasons we looked at on the price chart. The breakout, trendline breakout backtest would resolve positively if this resolved negatively, if that makes sense. And with that, I think... oh, hang on, we did look at real estate. Yeah, look at real estate. Rates are going up, yeah, because bonds are going down. Where's bonds? No, that's real estate. I've got it somewhere. Here we go. Oh, fuck's sake, that's the same one. Have I got it twice? No, I'm just going crazy. There we go. Here's rates, bonds rather. So rates going up, bonds going down. You'd think rates going up would be bad for real estate, but people, I mean, look at this. It's making new highs. Real estate is making new highs. Yeah, maybe people are rushing into real estate in anticipation of it all crashing down to fire sale prices, and you may as well get in now. I don't know. Thus concludes our